Hey everyone, welcome back to the Living in Maryland channel where we discuss all things living here in the great state of Maryland. And today we are doing a quick update on mortgage interest rates so you can know how that might impact you if you are thinking of buying or selling a home in today's Maryland real estate market. So wanted to jump right in on exactly where interest rates are at. So today we are looking at approximately a 6.5% interest rate on a 30-year fixed conventional mortgage. Now, as always, I like to share that mortgage rates, they will vary and change day by day. They can also vary and change by overall borrower profile. So things like credit, loan to value, things of that nature, right? Loan balance, things like that. So this is at least going to get you in the ballpark. But if you are thinking of buying a home, you definitely want to look and talk to a professional and see exactly what rate you might qualify for based on your exact situation. So that's where conventional mortgage rates are at today. And then you are looking at FHA and VA, which are known as government loans. Those are right around 6.05, so almost 6%. Now, to be honest with you, if you talk to some lenders, they can shop various banks. Some lenders have access to different things where I think you can even get that a little lower than the national average if you have strong user profile and overall credit. So it's something to kind of think about and consider if you're thinking about jumping into the market today. And I had mentioned that conventional 30-year fix right now are at 6.5. If you were to consider a 15-year conventional fix, just to give you an idea of what the difference is, you're looking at 5.95, so over 0.5% less if you take a 15-year mortgage. Now, to be honest with you, in everyday practice, I see this very rarely. I might have 1 or 2 clients a year or less than that actually use a 15-year mortgage. It shoots the monthly payment up. A lot of people just don't go that route. But if you are someone who can maybe have a threshold for a higher payment, you might want to look at a 15-year, and that is a great way to get that interest rate down to where you're paying less in overall interest and that much more to principal every single month on your mortgage. So, and then I also want to give you a quick kind of brief understanding and kind of rundown on how mortgage rates work. So they're what's called mortgage-backed securities. So the reason why these mortgage rates, if you pay attention to them closely in any way, you will see that they change throughout the day and they change every day. And the reason for that is because when you go and apply for a mortgage, those mortgages are going to get sold and they're going to get packaged up and sold. And then a group of investors or any kind of investor out there, various countries out there can go and they can buy that instrument on the bond market. So as there's more demand for those mortgage-backed securities, those rates are going to drop. When there's less demand, you're going to see interest rates rise in that kind of situation. So just kind of a brief kind of rundown on how that works. And the thing that I really like to look at is the 10-year treasury bond. And the reason for this is because it's the biggest competitor in my experience with mortgage-backed securities. So if you see the 10-year mortgage treasury going down, then mortgage rates are going to follow on that day. If they're going up, mortgage rates are typically going to follow. And the reason for that is the treasury yields are known as a risk-free investment in the financial world. If you have cash that you're looking to invest, you can invest it in a treasury bond and there's virtually no risk. The U.S. government is always going to pay out on those. So it kind of makes sense from that perspective that you're going to have mortgage-backed securities be higher than those and kind of, follow that trend, because there is going to be a little more risk as an investor in mortgages. Most people pay their mortgages, but not everybody. So there's going to be a little more risk investing in a mortgage-backed security versus that treasury bond. So just kind of keeping that in mind and kind of knowing that trend can kind of help as you're looking at the markets. As always, I am a licensed realtor here in the great state of Maryland. So if you ever have any real estate questions or you are wondering whether buying or selling a home in this market is the right decision for you, feel free to reach out however you are most comfortable, and we would love to have a conversation with you and see how we can best assist. Moving on, so as far as rate predictions, this is impossible to tell. Nobody has a crystal ball, but just wanted to give you an idea of what some of the big names are saying. So we got Fannie Mae, Realtor.com, and Redfin all predicting mid-6s as far as where mortgage interest rates are going to be at the end of this year of 2024 heading into 2025. So there's a range between 6.3 and 6.7 from Fannie Mae, Realtor.com, and Redfin. So, we're kind of already there, and the Fed has already been, talking openly about, potential rate cuts come September and moving into the fourth quarter of 2024. So is it possible that that's already kind of baked into current interest rates? That is very possible. Could they move lower? Absolutely. They could go higher. So it's really hard to say, especially as things evolve and as the Fed continues to meet and discusses what's going to happen. So, but that is what the big names are saying. If you are thinking about buying now or even open to buying sometime in the future, you can kind of gauge what you think is going to happen there, or what might be the best move for you and your family. Also wanted to mention that rates, at least where they are today, off of their 12-month highs, is down 1.5%. So we saw a hair over 8 in the last 12 months, and rates are down today, as I mentioned, in that mid 6.5 range. So when you look at it from that perspective, rates have come down. Could they go, much lower? We hope so. It's just kind of going to be hard to tell. Now, I also want to let you all know that the market is continuing to just kind of neutralize. It's continuing to settle down. We are seeing more homes starting to see price reductions and sit on the market a little longer. So if you are a buyer, this is a great time to at least consider maybe thinking about getting back in the market, because there are more opportunities to go see homes that don't sell in the first weekend, to maybe negotiate with some sellers out there some reasonable credits to help you buy the rate down even further than where they're at today, and maybe help make that a little more financial sense for your monthly payment and for your overall finances as a buyer. So that's the overall state of the market right now. There are homes in certain locations and certain price points that are still selling in the first weekend, but there's also a lot of homes in a lot of various zip codes and markets throughout Central Maryland that are not selling on the first weekend and are starting to we're starting to see those homes sit 2 to 3 to 4 weeks and not sell on that first weekend. So just a quick update on exactly kind of what we're seeing today. And of course that can change at any time, but that is what we're seeing today. And then what I'm always telling buyers today as well is always trying to keep in mind that sweet spot, since rates are down off their highs and demand has not shot through the roof yet. Trying to find that sweet spot to see if it makes sense to where you can get into a home with lower interest rates today than previous months without all that increased demand, right? Because if interest rate, let's just kind of make something up right now. If interest rates were to drop from 6.5 to 5.5 tomorrow, that would significantly increase demand in the marketplace. More than likely, with that increased demand, prices are going to start going up due to multiple offers and higher demand overall. So just kind of keeping that in mind, trying to find that sweet spot, which it seems, we haven't seen that increased demand yet with interest rates down off their highs. So if they were to go down significantly in a short amount of time, we would more than likely see that demand and that multiple offer situation come back. So kind of keeping that in mind and with your timeline and seeing what might make sense and be the best decision for you and your family. All right, so I'm going to give you a quick example of what it looks like in form of a monthly payment as interest rates start reducing a little bit, so you can kind of know and have a ballpark of what that looks like. So on a $500,000 home, at a 6.5% interest rate, the mortgage payment for the principal and interest, so I'm not including property taxes and insurance on this, is $3,160. Now, for every 0.25% rate drop, that's going to lower that monthly principal and interest payment by $81. Every half a point drop is going to drop it by $162. So for example, from 6.5 to 6.25, it's going to drop that payment $81. From 6.5 to 6, it's going to drop it $162, and so on and so forth. So just to give you kind of a little idea of what that looks like, that's kind of what you can keep in mind as you monitor rates, and hopefully we start to see those even go down further than from where they're at. And then last but not least, is now a great time or a good time to buy if you are thinking about buying a home? I would say this: there is way less competition right now than in the last 6 to 24 months. So if I know it's kind of easy to think of the market as how it was in the recent past, which is multiple offers everywhere, homes selling in 5 seconds with 10 offers. That has definitely started to slow down a lot. So it's definitely easier and more affordable because there's more level negotiations. It's more of a level playing field right now with buyers and sellers. So from that perspective, it's definitely a better time to buy now than in the last 2 to 3 years. So that's something to keep in mind if you are a buyer on the fence or thinking about jumping into this market. Thank you so much for joining us. We look forward to seeing you at the next video and hope you have an awesome day.